Hey everyone, and welcome back to the channel. Ever dream of a world where your money just makes more money without you even lifting a finger? Well, you are in the right place. Today we're diving into a super cool, often overlooked strategy that can seriously change your investment growth. DRIPs. So what exactly is a DRIP? DRIP stands for Dividend Reinvestment Plan. Sounds fancy, but it's actually pretty simple. Imagine you own a piece of a company. When that company does well, it often shares some of its profits with the shareholder in the form of a dividend. Usually, you get that dividend as cash in your account. But with a DRIP, instead of that dividend cash landing in your bank account for you to spend, it automatically gets used to buy more shares of that very same company. Think of it like a never-ending cycle where your investments keep feeding themselves. No need to log in, no need to click buy. It just happens. Now, why is this so powerful? Because of something called compounding, often called the eighth wonder of the world. Imagine your investment as a small snowball. Without a DRIP, you get your dividend, maybe you spend it. The snowball stays the same size, but with a DRIP, your dividend buys more shares. So now, next time the company pays a dividend, you own more shares, which means you get a bigger dividend. That bigger dividend buys even more shares, and so on. Your snowball gets bigger and bigger. Let's look at some numbers. Say you start with 100 shares of a company, each costing $100. That's a $10,000 investment. And let's say this company pays a 3% annual dividend. That's $3 per share. Without a DRIP, you'd get $300 cash each year. Nice, but your share count stays at 100. With a DRIP, in year 1, your $300 dividend buys you 3 more shares, assuming the stock is still $100. Now you own 103 shares. So in year 2, your dividend isn't based on 100 shares anymore. It's based on 103 shares. That's $309. That $309 then buy you even more shares. Fast forward to 5, 10, even 20 years, and that seemingly small difference snowballs into a massive difference in your total wealth. You're not just earning a return on your initial investment, you're earning a return on your returns. Alright, so DRIP sounds amazing, right? And they are, but like any investment strategy, it's good to know the full picture. Let's quickly go over the main pros and cons. On the pro side, automatic compounding. We have talked about this. It's huge for long-term growth, cost-effective. Many brokerages and company-sponsored DRIPs offer commission-free reinvestments, built-in dollar cost averaging. Since dividends are reinvested regularly, you're buying shares at different price points over time. This helps smooth out market volatility. Disciplined investing. It takes the emotion out of it. You're consistently investing without having to think about it. Fractional shares. With DRIPs, you can often buy parts of shares. So every single dollar of your dividend gets put to work. Now for the cons. Taxation. This is a big one. Even though you don't receive the cash, those reinvested dividends are still considered taxable income in the year they're paid. So you pay tax on money you haven't actually touched. No immediate cash income. If you're relying on dividends for regular income to pay bills, a DRIP isn't for you. Loss of control on purchase price. Your dividends are reinvested at the current market price on the payment date. You don't get to choose when to buy or if the stock is on sale. So, who are DRIPs best for? They're fantastic for long-term investors who want to build wealth for goals like retirement without needing immediate cash income. And there you have it, the lowdown on dividend reinvestment plans. DRIPs are a powerful, passive way to put your money to work, leveraging the magic of compounding to help you build serious wealth over the long time. If you're looking for a set it and forget it strategy to boost your passive income stream without lifting a finger, a DRIP could be exactly what you're looking for. Did this video clear things up for you? Let me know in the comments below if you're using DRIPs or plan to. If you found this helpful, please hit that like button, subscribe for more money tips, and ring the notification bell so you don't miss our next video.